One of the key strategies we use for clients in retirement is called the bucket strategy. I can give you kind of a key example right now of a client who's 80, and she's very, very concerned about running out of money. And she has, a decent amount of money. She's probably not going to run out of money, but she's very fearful. So what we do for her is, let's say an example is $5,000 a month she needs to live on cash flow from a portfolio. So we put 3 years worth of cash flow into money market, and we take the money out of that. And it typically, let's say it's non-IRA money, non-qualified money, she's not paying a lot of taxes on that. And then we have other money that's sitting in accounts that are maybe conservative portfolio, maybe say 70% fixed income bonds, 30% stock. So that money is there to replace when the cash is all spent down. We'll take that portfolio, then put it into cash and spend that down. Because when it comes to, and the reason why these bucket strategies kind of work, and as you go longer term, you have buckets that are 5 to 7 years, a little more aggressive, maybe moderate, 60-40, 60% stocks, 40% bonds. Then your 10-year plus bucket's probably going to be 70 to 80% stocks, right? Because over time, risk goes down, right? So that's the advantage of time. With stocks, less risk. So we know that, so we design models and portfolios and strategies that work with that strategy, and always be moving people's money. The sooner they need it, the more conservative it is. If you want to know how a bucket strategy can work for you, and how we can utilize bucket strategies not only to provide cash flow for you, tax efficient cash flow, but while we're taking the money from the early buckets being tax-free, we can converting IRAs to Roth accounts on the back end of that as well. So being the CPA and the financial planner, we roll all these things together, and not only are you going to have conservative, long-lasting cash flow, but we're going to maximize the tax benefits as well.